So, what matters? This is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community. To recap, the month of January was up, and it was up because everybody was thinking that the Fed was going to be cutting rates going into the end of this year. And February finished down because now everybody thinks, nope, the Fed's going to keep rates high. Now, what matters in all this? I found great confidence in how we're invested in the marketplace based on how in the year 2022, when the market went down, annuity sales hit an all-time record. They actually beat the record from 2008. And in 2008, we had the financial crisis. Again, the markets were down. Human beings are really good at panicking out of their investments when things were down, and 2022 was a pretty decent down year. And yet, what did people do? They sold, hence why markets are down, and they bought an annuity. Now, what is an annuity? Most annuities are some type of insurance and investment vehicle. The total amount of money that went into annuities beat the 2008 record by 17%. So that's how much money panicked out of the marketplace and went into annuities. Now, why I find that interesting? I find that interesting because annuities also have terms that lock that money up. So that money is probably never going to get the opportunity to go back in. That money actually didn't have the opportunity to enjoy January's positive return. What do I find interesting about that is, what did companies do? Companies themselves, the companies that you actually have the opportunity to invest in, according to Bloomberg, they actually set a record in 2022 of buying back their own stock. Now, why would someone, if I'm a company, why am I going to buy back my own stock? Well, probably because a bunch of people are selling it at levels that make it of value for them to say, hey, you want to sell my stock at that level? You know what? I'll just take it back. And my whole career, I've tried to pay attention to, are the companies selling stocks to people? Are they splitting? Are they doing IPOs or secondary offerings where us, the retail investor, the public thirsts after, wants to buy that stock? Or are they buying the stock back from the public that's panicking out of it? This January, they announced they're going to buy back 3 times as many shares as they announced last January. So what are companies doing? They are taking out there might be a recession playbook. We're hearing announcements of laying off companies. We're hearing announcements of shutting down new lines of business. And they're basically hunkering down to do what? To take their company through a difficult time. Why? So their company can exist and continue to thrive and continue to produce products and services that we want. And what I find is participating in the ownership of those companies, being long-term and not looking backwards, not getting caught up in our emotions or day-to-day, allows us to be better investors. What I want our clients to know is we're on it. We're paying attention. Continue to over-communicate to us what you need to make sure we have the right resources set aside. And if you're not a client, I first would create a flag that if you're being sold a product that appeases your feelings, it's probably not best for your long-term financial success, because the right advisor helps give you what you need and not necessarily what you want. The purpose of these up or down videos is to try and bring a little understanding about what you should be doing with your long-term investments based on what is going on. And so this is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community.